Hello, and on this episode of the Mortgage and Protection Podcast, we have Paul Holland joining us from Henchurch Lane, this time to talk all about the mortgage process for sole traders. Welcome back, Paul. How's it all going?
Hello, Tessa. Yeah, very well, thank you. How are you today?
Oh, good, good. I'm glad to hear that. And yes, all good too. Thank you for
Good.
asking.
Apart
So,
from the squeaky chair, I hear.
yes, I do have a squeaky chair, so I'm trying to sit as still as possible until I can sort it out. So hopefully you can't hear anything, but we'll see as we go along.
Let's
Um,
see.
okay, well, as you know, we've got questions here, haven't we? So
Yeah,
let's get straight into them. I mean, this one might be a little bit obvious, but can I get a mortgage if I'm a sole trader?
absolutely. You can get a mortgage if you're a sole trader. So most of the mortgages that we arrange actually are for sole traders. So if you've submitted your first set of accounts and you have a deposit, whether that's coming from savings, a gift, or if it's equity in your property, then there's a good chance that we're going to be able to get you a mortgage of some degree.
Okay, which is really great news because I presume what that question is really saying is it more difficult? Is it difficult to get a mortgage as a sole trader? So let's go to this question next then. So how long do I need to be a sole trader before I can get a mortgage?
Okay, so as long as you've been trading as a sole trader for 12 months and you've submitted one set of accounts to HMRC, then there will be lenders out there that would accept an application from you. Okay, you need to be mindful though. Um, you only submit your income to HMRC in once a year in April. So if you started trading in, say, December last year, 2023, and you come to us in December this year, 2024, then the one set of accounts that you're going to have would have been submitted in April 2024 this year, right?
Right.
So if that is the case, then you only would have actually submitted January, February, and March's income into that account. And
Mm.
that's only what a quarter's worth of business. So although you've been trading for a year and you've got one set of accounts, you've really only shown HMRC that you've earned what you would have earned in that quarter. Okay, so it's tying it up with the financial year if possible. So I always say to people, if you're moving from employment to self-employment and you can tie this up to close to April, that's going to make your life a lot easier, or it's going to be a lot sooner that you can secure a decent sized mortgage with your self-employed income than it would be if you started partway through a year. But the main criteria is 12 months trading and one set of accounts.
Okay, so that's hopefully clear there. You've confirmed that there, and a key point as well to take away from the episode. So, with that in mind, then, what documents do I need to prove my income? Then, I think you probably touched on it a little bit there, but are there any other documents we need to be aware of?
Yeah, specifically for income verification. So, the other documents we talk about all the time, things like bank statements, identification, proof of deposit. But from a sole trader's income perspective, what you're going to need is your latest 2 years SA 302 documents. So these are also known as tax calculations, tax computations. It depends on where they're generated. You can download them from HMRC, the portal that you have with them, or your accountant can generate a copy for you as well, if you have an accountant. And I refer to this almost like a bill from HMRC, right? So upon submission of your annual accounts, they're going to generate a breakdown of your income, your profits, and all the taxations that are going to become due. So if you've only been trading for 1 year, clearly you're only going to have one of these, and that's all you'll need. But if you've been trading for two, you're going to need the latest 2 years worth of those documents. Okay.
Right.
On top of that, you're also going to need your latest 2 year tax year overview documents, or one if you've been trading for 1 year, of course. And again, you're going to be able to download these from HMRC's portal. They're going to correspond with the SA 302 that we touched on. And if that's the bill, then this is almost like a receipt. So
Ah.
it's going to show you what tax is outstanding and what's been paid. And that effectively comes hand in hand. So 2 years tax year overview documents, 2 year SA 302s, unless you've been trading for a year, and it will just be the one. They're going to be, the main documents that you're going to need to verify your income as a sole trader.
Okay, well, a good analogy there as well with the
Thank you.
bill and the receipt. So that makes it easier to understand there. So, another question people would like to know then, let's go to this one. So, how does the mortgage process differ between a sole trader and a limited company?
Okay, so if anything, the process is actually slightly easier as a sole trader versus a limited company. So there are going to be less documents involved, and that's purely because a limited company is a separate entity. So if you remove that out of the way, then naturally there's going to be less evidence that's going to be required from a mortgage lender. Okay, so it's going to be a little bit easier, and there are actually less variations of how they calculate your affordability as well. So a lot of self-employed people will be interested in how much they can borrow, how much is going to go into the affordability calculator. As a sole trader, there are less versions of that outcome than if you're a limited company. So it does make it a little bit easier. So other than the income being verified though, and what figure you are using towards that application, the rest of the process is exactly the same.
Okay, so that's good news and hopefully reassuring to anybody listening to this, watching this. So there we go. Now, moving on, people would like to know, how much can I borrow as a sole trader, and do I need to put down a bigger deposit? So that's good questions there.
Yeah, that question comes up a lot with
Mm.
regards to any self-employment. The borrowing amounts are going to be similar whether or not you're employed, self-employed, contracting, however you earn your money. The borrowing amounts realistically are very similar across the board. The way that the lender is arriving at the figure though, at the income and what figure to put into the calculator, that's going to be what differs. So as a sole trader, the most common approach will be for a lender to average the latest 2 years of your profits. So let's say you earn 20 grand in year one and 30 grand in year two, they'd add them together and they would use £25,000 as the average, and they'd put that into the affordability calculator. If your income is on a downward trend from year to year as a sole trader, they'd take the most recent year. They wouldn't average it out. And some lenders would take the latest year in isolation, but it just depends on what lender it is that you're looking at. So it's your broker's job to decipher what lender and what approach suits your circumstances best, basically.
Right, okay, there we go. So something to bear in mind there. Now, what if I have bad credit? Can I still get a mortgage as a sole trader? Now, the bad credit question, it comes up quite a bit, doesn't it, on a lot of the episodes we record. So
Yeah.
how does it work here?
Yeah. Okay. So similar. It's rare that someone's credit is the deal breaker. So depending on how bad it is, obviously, if it's really, really bad and really recent, then you might not be able to place your business anywhere. But generally, it could mean a slightly higher rate with a specialist lender, and it could mean that you need a larger deposit. So some lenders will say, we will give you a mortgage based on your credit, but instead of 10%, you need to give us 15% deposit. Yeah, but an impaired credit situation isn't a deal breaker in and of itself.
Okay, which is really good news. And it's great that we got through that question there.
I know, just.
Few trip ups. But yeah, hopefully that does sound reassuring. So it depends on the severity and the circumstances, doesn't it, there?
Yeah.
Now, can I get a buy-to-let mortgage as a sole trader? So any differences here?
You can get a mortgage as a buy-to-let mortgage, as a sole trader. So buy-to-let mortgages will generally be based on the rental income from the property that's going to drive the affordability. So your personal income actually isn't as crucial as it is for residential mortgages, for your personal mortgage. Some lenders will actually have a minimum income requirement on a personal basis. So some lenders will say something along the lines of, you need to personally earn £25,000 before you can get a mortgage with us on a buy-to-let basis. But other lenders will have no minimum income requirements. And obviously, depending on your current setup, what sort of, what part you fit there will depend on what lender you're placed with after having a chat with your broker. But just being a sole trader isn't going to be the reason you can't get a buy-to-let mortgage. If you've got a deposit and you're a sole trader, then have a chat with the broker and talk to them about investing in property.
Okay, so again, good news there, really good news. Again, with this next question, how does the remortgaging process work? As someone who is a sole trader, again, any differences here?
Okay, so remortgaging for sole traders isn't going to be any different than what we've already discussed on this podcast. It will, of course, differ for, let's say, anyone who has switched from an employee or a different type of employment to a sole trader since they last completed a mortgage application. So obviously they're asking about remortgages. So we need to be mindful that, some people may have got or bought a property when they were employed, since changed to a sole trader as a self-employed basis, and the situation for those guys is going to be completely different this time around. So, these people do need to bear in mind the timeframes that we've discussed and all the changes that will come as a result of that employment change. But don't forget, if you've already got a mortgage, which you will have if you're trying to remortgage, your existing lender will usually offer you a new deal when your current rate comes to an end, and that's not normally going to require any income assessment either. So if you're not looking to change the lender or change the borrowing amounts or the term of your mortgage, then we can conduct something called a product switch with your existing lender. And that's just a really easy way to make sure you're getting a very good deal without having to go through the whole income verification and assessment process.
Okay, so that's useful to know there. Now we have touched on the process, I think, haven't we here? But how do I apply for a mortgage as a sole trader then? Is it the same process?
The best way to apply for a mortgage as a sole trader is to hop onto Google and type in Henchurch Lane Financial Services, and you'll be able to find our number and speak to one of our specialist self-employed brokers who are probably the most knowledgeable brokers in the country when it comes to self-employment.
Okay,
So
there we
we
go.
do hundreds and hundreds of self-employed mortgages every year, and they are complex, and we know that our knowledge is market leading in that aspect. So if you've got any qualms or concerns about, speaking to a broker who doesn't necessarily or isn't necessarily versed in that situation, then you need to seek out someone who is, which is us, basically.
Okay, and of course, if you're listening to this episode or watching this episode, it's already on the website, so you're here already.
There
So
you go. Yeah,
there you go.
go to the
You've
contact
made
us
it.
page, and you'll see what you need there.
There you go. So you've demonstrated there how a mortgage broker can help, like Henchurch Lane. Is there anything else we need to consider here? If you are a sole trader looking for a mortgage.
Yeah. Okay. So in this instance, if you're a sole trader looking for a mortgage, have a chat with a broker. That's the first port of call. Their mortgages aren't straightforward on an employed basis, let alone a
Mm.
sole trader basis. What I will say is that more so than ever in this instance, preparation is key, because sometimes a decision that you make could take a year to actually come into practice with regards to your accounts or with regards to your income changes and things like that. You need to be mindful of tying that in with your fixed rates or your intentions or your short, medium and long-term goals as well. So even if you're going self-employed, we speak to people all the time that are planning on going self-employed over the next couple of years, and we'll just run through scenarios with them to make sure that we're not trying to, manipulate anybody's choices, but we're trying to make sure that they're not tripping themselves up with just a choice that could be made quite easily different. Okay, so it's always good to talk through that with a broker and give yourself a little bit of a roadmap so that you're comfortable in the decisions that you're making.
Yeah, I think that's a great note to end on there. Preparation really is key, isn't it? There we go. And it helps to just smooth out that process, doesn't it?
It does
Um,
indeed.
okay, well, I think we've covered all that we can on this episode. We'll be back for more, won't we? Not sure what we're covering next. We've got a few other episodes lined up, haven't
I
we?
reckon it's
So,
mortgages, I'm
well,
not sure.
there is that. Thank you for that, Paul, as always. Hopefully, we've helped a few people out on the episode, and we'll speak to you soon.
Excellent. Thank you, Tessa. We'll speak soon.